Welcome to Financial Strategies with Andrew and Daniel Adjemi, powered by the Retirement Income Store and brought to you by Adjemi Financial Strategies in Guilford, Connecticut and Denver, Colorado.
You know, I was talking to Greg the other day, and Greg told me I have $100,000 in a CD earning 0.02% because I want my money to be safe. And I said, Greg, did you know you're losing money? And he said, no, I'm not. I realize that 0.02 is not very much money, but I'm scared and I don't want to lose anything. So I said, Greg, if you gave me $100,000 and I promised that in 10 years I would give you $81,900, would you say that was a good investment or a bad investment? And he said, I wouldn't do that. And I said, that's essentially what you're doing by having that money locked up in the bank. I'm Daniel Adjemi.
And I'm Andrew Adjemi, and you're listening to Financial Strategies with Andrew and Daniel Adjemi. Glad to have you back for another rendition. Today's topic is the guaranteed way to lose money. And happy Resurrection or Easter weekend to you all, depending how you define it. But we're talking today about the guaranteed way to lose money. If you haven't guessed it already, a bank is a guaranteed way of being able to lose money. And it's excellent example of what people need to understand today as they especially approach retirement, because so many retirees have money in the bank because they want to have safe money. Is that not the best place to put money?
Well, AAA, if I offered you that deal, you know, you give me $100,000 and in 10 years, I'll give you $81,000. Would you take that?
No, I mean, that's a negative interest rate.
Right. And that's exactly what's happening right now. So people think in nominal terms as opposed to real terms. So what do we mean by that? Well, you'd still have $100,000 in the bank, but your purchasing power would have decreased by 2%, right? Basically, the Federal Reserve CPI, Consumer Price Index, is saying that there is a 2% over time inflation rate. And that's what would happen to that $100,000. It'd turn into that $81,000 over a 10-year period of time because real rates are negative, right? If you're earning nothing, but you have inflation at 2%, you're losing 2% a year.
Yeah, 2% purchasing power, right? Like you said, you still have the principal. The 100,000 is still there, but you can only buy $81,900 worth of goods with that $100,000 in 10 years from now, is what you're saying. So, yeah, that's a negative interest rate. I mean, I don't think anybody here, listening to us on this show would like to have a 20% negative interest rate. That's over that 10-year period of time. It's almost that calculating to that. So, and I think it's a good point. What you're saying, Daniel, is, in regard to these definitions, it depends how you're monitoring that and what you're looking at in regard to those interest rates. You're looking at your bank book, and your bank book says you have the $100,000, but the definition of purchasing power is really different from that angle and lesser.
Right. Well, definitions, so we don't talk about real rates, right?
Right.
But we also use the conservative number. Some people might say, 2%, we're in deflation. But it depends what you want to buy.
Right.
Right. So we work and we help retirees a lot. And what is something that is going to be one of their biggest expenses that they may not have thought about?
Well, as time goes on, one is healthcare.
Right. So healthcare, right? The government's numbers on healthcare say that we've had from 1998 to 2018,
20 years. Mm-hmm.
20 years, that number is 107%. Now, independent studies have shown that that's really like 200 in EDE% over that time frame.
So the costs have gone up. The government says the costs have gone up a little over 100,000, but the independent
100%.
I'm sorry, 100%. Thank you for catching me. 100%. But
over
then
that 20 years.
Over that 20-year period of time. And then the researchers, independent researchers say it's more like, what did you say, 280%?
288% over that 20-year period of time. So we used a negative 2%, right?
Right.
Because if CPI says it's 2% and you're earning zero, that's negative 2. But if you're talking about if you're going to need healthcare, right? This is premiums for healthcare, and that's not including your deductible, because deductibles have gone up even more. Right. That is real negative rates right there. Right. That's huge.
Right.
What is that? 15% a year and 14% a year, and you could be in serious problems if you can't make that kind of money to protect yourself, the future you, for healthcare costs, or if you're younger, maybe it's buying a house, paying for education, buying a vehicle, buying property, things like that. Right. Or investing, right? Because if the stock market is inflating and you can't afford to buy into the market because we're just inflating it, negative rates are a real thing.
Yeah. Yeah. And I need to let you know in our listening audience that you're listening to Financial Strategies with Andrew and Daniel Adjemi. And today's topic is a guaranteed way to lose money. We have a companion paper to go along with today's show. And this paper is called The Universe of Income Generating Investments. The Universe of Income Generating Investments. You can have that by calling 800-725-7616, 800-725-7616. Just ask for the Universe of Income Generating Investments paper. All right. And that will be able to help you understand, we're talking about the bank this week and the guaranteed way to lose money, but there are alternatives. So, Daniel, when you're talking about, negative interest rates and my understanding is that there's in the world today, there's over $15 trillion invested at negative interest rates currently. And, we could spend quite a bit of time talking about that. But, as the article that, we saw this article about the UBS in July of this year, the investment company UBS going to be charging 0.75% to invest your money in cash if you have over $280,000. So if you have our listening audience, if you're having money in a UBS and you have some money in there, $280,000, $300,000 plus of cash, they're actually going to be charging you money. So you're going to be at a negative interest rate. So negative interest rates are a real thing. And forget about the inflation. They put the inflation on top of that just from the CPI standpoint, and you're almost at a negative 3% right off the get-go. Ouch.
Yeah, that doesn't sound very good for living off of your money in retirement, if you're talking about those kinds of rates. And we've talked about this a lot, and that is how governments are pushing people further and further out on the risk curve, right? And so that's a way that UBS can get people to put their money into markets, put their money into whatever UBS is selling, because if you leave it in cash, they already have negative rates. They're just lowering that number to $250,000. So the idea is take from the rich, right?
Right.
If you have $250,000 in cash, which they're saying, well, then we're going to charge you, right? We're going to charge you 75 basis points, 0.75% to keep your money with us. Right. And that's something that we want to look into probably as governments decide they want to do that. And some of the stuff Elizabeth Warren is proposing and things like that.
Yeah. Yeah. And that is not the way to live off of your interest and dividends, is it, Daniel? In the retirement, you can live off your principal, you can live off your interest and dividends. And that's a good point what you bring up. I mean, there is no interest at that point, and you're actually digging into your principal. And it's kind of interesting when people talk about not wanting to lose money, and what's the definitions? Well, many times when I'm talking to people in a close to retirement, right? They're talking about preserving their wealth and not having their account balances go down. But everybody wants to make money on their money, and rightly so. And you should be able to make money. And, we have, there are alternatives for you besides the bank and besides the stock market. And I want to make sure that you understand that there's other things besides the bank and besides the stock market. And most people don't understand this. So we have a piece for you today, a paper that be able to give you to be able to help understand some of those alternatives. Some of those alternatives, there's even more than what are on the sheet. But basically, the universe of income generating investments is a piece that we have available to you today that we'd love to give you for you calling 800-725-7616. 800-725-7616. We also, for the next 5 callers, have the book by Howard Marks called The Most Important Thing. And we'd like to give you this book to the next 5 callers. This is a book that, Daniel, tell them a little bit about this book.
Well, this is a book that explains risk. Howard Marks is he's a billionaire investor. He's built a huge investment business. And his goal in this book is to help investors understand risk in a different way. So risks that you may not perceive as risks, as we spoke about with the bank, people put their money in it. They say, Daniel, I want safe money. I'm going to put it in the bank. And they don't realize that that's actually, there's risk there, because if you said you were losing 2% a year on a conservative side, you would say that that is a risk, right? Right. So to have that cash available, it's costing you something. So he explains risk really well, and risks that people may not have thought of, as well as provide some of these alternatives. He talks about a lot of alternative investments in the books to get people's heads going and thinking about other ways that you're not hearing about from the big financial media companies.
All right. So for the next 5 callers at 800-725-7616, we're going to be giving away the book, The Most Important Thing. So we'll look forward to giving that to you. And we're going to take a break. We'll be right back after this.
History tells us the market goes up and the market goes down. What would you do if you lost half of your retirement savings? It's time to make the shift to steady, reliable retirement income. And where do you go? The Retirement Income Store. Log on to agemy.com for your free retirement review. That's AGEMY.com. The Retirement Income Store, where retirees go for income.